All right, everybody, it's Ted here once again with Somebody's Wicks, your favorite smart money podcast. I don't even know if that's a thing, but it's your favorite one. I'm telling you right now. Um, so I'm just gonna give a quick review, I guess, of what I did earlier today, whatever it was earlier this afternoon. Um, and that's going to be regarding Bitcoin, Monero, and Ethereum. All right, no need for intros. I'm gonna do this really quick, and that's all I'm gonna do. All right. Anyway, so let's go ahead and well, first of all, smart money. If you don't know what it is, if you're just now watching this video for the first time, whatever you've been taught as far as retail theory has been concerned, if you've been following trend lines, trading off trend lines, trading off double tops, uh, bear flags, bull flags, all that's triangles, harmonics. Throw that out the window when it comes to smart money. Smart money is all about the people that have the means, the monetary acquisition to basically make the charts the way they want to, and it follows a specific algorithm. It's pretty much that simple. So if you think a triangle is going to turn into something uh, that you think is going to go one way or another, you're looking at it the wrong way. All right. Price seeks out imbalances and it seeks out liquidity. That's what price does. Price does not care about what kind of shape it makes. So if you're looking at a shape of a chart, if you're looking at trend lines of a chart, you're looking at it all wrong. I'm telling you right now. Believe me, I did it for a year. I lost a lot of money doing it for a year. I got mentored by Inner Circle Trader. My life turned around because of this. Okay. So, uh, if that's type of stuff that you want to hear, and I know a lot of people you don't like hearing it because you're going to go, oh my God, this guy has no idea what he's talking about. Just take a minute. If you want to go to ICT's page, Inner Circle Trader, watch his videos. It'll be eye opening for you. Believe me. It's going to be a lot about Forex. I'm taking this to crypto. The principles are the same, they're all there, right? So if that's what the kind of stuff that you like and you want to hear more about, you want to learn something new, you want to open up your eyes, subscribe to this channel, right? Easiest thing you can do is at least like the video. Please, that would be awesome of you guys if you just at least like the video. And if you have somebody that is on the verge of trying to figure out something new and they don't know where they're going, and you might have a grasp on this, share it with them. I say, hey, I got this guy who's trying to like figure out this crypto stuff. He's got this new the theory that they've been working on with forex for, and it's been working for a long time. Now he's bringing it to crypto. Maybe this will help him out. Hopefully. All right, so let's jump right into the charts. This is going to be Bitcoin right here. I am in the the day chart. The day chart. Yes, I'm in the day chart. Okay, why am I in the day chart? To be honest, one reason and one reason only. Okay, so I was looking at the market maker buy sell model. If you don't know what that is kind of the basis of smart money. So I'll give a little quick click. That's kind of hard to say. Say that like 10 times fast. I wonder if you can do it. Quick click. Never mind. I'm going to try it. But this is what it is, right? So, or you can verse this. This is the sell model. There's also the buy model. So the sell model means that basically for the market makers to make money, right, on a sell, right, what they have to do is they first have to manipulate you going up and then sell going down. And eventually they will make money getting below where they originally started by that manipulation right there, right? Flip that upside down, it's the same thing for the buy model, right? So in a real chart, it would look something like this, right? So you have, your kind of squares that you have your buy model, right? Or this is actually the sell model. So it goes up to here, and eventually they're saying it's going to lead down to here, right? So that's what I'm doing here on the Bitcoin on the daily. That's why I was looking at it from this perspective. Because look, if you look at it where we're at right now, we are in an area, especially in the daily, to where we have spent a lot of time. So that would actually almost be a box in itself, right? That we were looking at with the market maker buy sell model. If we go previously, and you can see there was kind of almost a spike just kind of down here, and most of the time that has been spent is actually up here, right? So if you go earlier, look, there's a big gap right in here to where there was no time spent. There was no trading involved. So that means that it's going to be moving on from this area, right? That's why I was looking at it from the daily perspective. So if we go out from the 4 hour, right? I put this Bitcoin reverse in here because this is above here. This is where I thought was, or around this area is where I thought I was going to reverse. Actually, it was right around this green line, or this yellow dotted line is where I thought it would reverse. It dropped down a little bit further down into the monthly fair value gap. Fine, whatever. But now it is pushing its way back out. All right. So the question is it going to continue on moving up, or is it going to fall back down? So I threw a fib on top of this, right? So we have the 100 here, the 0 here. The only thing I don't like about this is that it has only come back to about, hasn't even come back to the 50% yet. But then again, this is also, and down below here is also where we spent a lot of time. A lot of people would say, okay, it needs to come back down to at least the 61.8% or below that for it to be considered the discount price. But if we're looking at the market maker buy sell model, we've already been in those areas down here. So we don't have to go back down to them. We don't have to go back down to that discount price. It can move up from here, is what I'm saying. So, that being said, if we're looking at Bitcoin, as you can see, it made 2 double lows. There is a 1 hour fair value gap just below this. All right. So, what I'm thinking that is possible is that for it to continue to try to fake people out, try to make people think it's going to possibly go lower, right? Is that you have the bearish order block right there. I could probably turn this into red. That way people will understand, right? Which means it'll bounce off of this. Bearish order block means it's your last up candle, right? And then you have your next succession of down candles that close below it, right? Now, the bottom part of that candle will be considered your bearish order block. Why? Because smart money bought a bunch in this area. Let me pull it out for you. In this area right here where I have it underlined in the green candle to make retail think it's going to go up. So they bought along with it. It got to equal highs, somewhat equal highs. Boom, they sell. Why do they sell? To make people think, oh, well, it's somewhat equal highs. That means it's resistance, so it's going to sell off, right? Gets to about equal lows again, right? Support. There it is. It's going to come back up here, right? And it's going to sell off. Everybody, it could be in consolidation or something like that. That's not what I'm looking at. I'm looking at the bearish order block, right? And so since I'm looking at the bearish order block, let me see if I can find out where this thing is. There it is, the path. it would probably come up to the bearish order block, get rejected, fall back down into the 1 hour fair value gap, right? That way it would fill the imbalance that it left in the 1 hour. I'm on the 4 hour, but also it would also be a bullish order block right there. You have a down candle, then you have an up candle that closes above it. So that is a bearish order block, right? Didn't mean for that to click there, but it's okay. So if we go to the 1 hour, I was showing you. Okay, you see there's that 1 hour fair value gap. It dipped down into it just barely. Then it came up to it. Boom, acted as support. Comes up, comes back down, acted as support. Comes up, barely goes above it. And then it leaves a fine line right there. That's what's interesting is this right here. Again, another area to where people could possibly think is support. They go, okay, well, at least it got above there. Now it's looking like that's the support line. And what does it do? Boom, drops below it. Takes out anybody that could have been thinking that that was support. And stops at, kind of hard to tell, but in a 4 hour sense, that possibly could have been about halfway through the bearish, the bullish order block. So then, boom, runs up again. Where are we at again? Somewhere about equal highs again. And then all of a sudden, boom, pops up. So these were all equal highs here below that beforehand. Right? So then it pops up above it, taking out anybody that could have been trying to sell short with a very short stop loss. Right? Or anybody that could have been having a buy stop. It could have been taking those people out too, because it triggered their buy stop and then pulled back and then took those people out. So this is what smart money does. It plays the game. It goes back and forth between both the buy and the sell. So this is to me, the buy the buy model, to be honest, because we started from way up here and now we're coming back down and now we're going back up. So this would be the buy model. This would be the bottom of the buy model. Right? So that being said, like I said, what I'm looking at is for it to possibly come here, come back down here into this 1 hour fair value gap to fake more people out into thinking that it's going to sell. Once it does that, boom, raises above these equal highs for liquidity. I don't know why it erased that, but it did. Comes above these equal highs for liquidity. Now, when it does that, it's probably going to come up to about right here. And then everybody's going to start chasing it because they're going to realize, oh, crap, I put the wrong thing on it. I put the sell on it instead. I need to start buying. And then as soon as they start buying, smart money's going to take it the opposite way, just for a short moment, just enough to get people to start chasing it down, right? And then once they start chasing it down, boom, they turn around and go back the other way with it. That is my prediction. If you look at this, the 127% extension. Okay, so your extensions in smart money need to be the 127, always the 50%, 150, 250, 350, whatever it is, and also 162, because of course 162 is the golden ratio. More than likely, that's where it's going to end up, right? So if you look at the 162, it's just, it's already above the, I think this was a breaker, if I'm not mistaken. Yes, this was a breaker. So again, when there is a breaker, it could stop below it, pull back a little bit, and then run it, right? And then once it runs it, damn it, did it again. Once it runs it, I'm just going to act like we're already over here. All right, once it runs it, it's going to pull back, and now this whole area is going to be support. So, not just a line, there's going to be an area of support. Okay, so support is never like a special line that goes straight across. It's an area that is presented by a series of basically a formation of candles, generally a low, high, lower, low situation, or a high, low, higher, high situation, something like that. Then your highest candle in your low, high, low would be your order block, and then your lowest candle in your low, high, higher, or sorry, your high, low, higher, high. The lowest candle would be your breaker in that situation, and the breakers would be considered your support. So, and again, it's an area the size of a candle. So again, this could come up here to 162, pull back, and then take off from there. Now the question is there any? Yep, right there. There it is, right there. Okay, so your 200, even though it says negative 100%, instead of reversing the Fibonacci, I just put everything negative. That way I don't have to reverse it. So wherever it says a negative 100%, that's actually 200%. So this would be double of your original. So when I'm saying by double, I'm saying that this area that would span from here to here, right? If you double that, it should go from there to there. There you go. That should be your 200%. Where does that lead you? It leads you right to what I put as the daily liquidity point. Right? So that is a confluence right there. That is confluence because not only is it going to get above the weekly fair value gap, it could possibly touch the top of the weekly fair value gap because it ran right through the bottom. I mean, it just ran right through the bottom of the weekly fair value gap after it fell down really hard and touched it right here. Right? So let me see if there's any. I don't think there's going to be a lot of movement in the previous where it happened first, where I measured it from. I don't see the candles. Oh, they stopped. They stopped on the 1 hour for going this far back. Let me go to the 4 hour then. Okay. So here you go. Yep. You can even see on the 4 hour, it ran it. It ran this weekly fair value gap. There wasn't much red candles in the weekly fair value gap. So therefore, that means to me that we're probably going to run up to the 100 per the 200%, I should say, and then fall back possibly down to the 162. Why? Because that's almost the exact area into which this fair value gap has placed itself. And in freakish coincidence, that is what has happened. But then again, it's not a freakish coincidence because this is part of the algorithm. This is what the smart money people know. This is what the institutions know are possibly going to happen. And that's why you should be paying attention to it. So, therefore, my last thoughts on Bitcoin before I move on really quick. Again, it could hit this bearish order block, fall back down to the 1 hour fair value gap, run the highs, pull back, run it again, pull back, run it again, pull back, right? So you got to watch the breaker. Doesn't know if it'll definitely run the breaker and then probably pull back into it a little bit and then run up a little bit more into the weekly fair value gap that we have marked out here, but then it might fill it. This is where the consolidation will probably occur, is anywhere between 24,100 and about, what is that? About 26,800, somewhere around in there. Okay. So those are my thoughts on Bitcoin. All right. Oops, wrong one. All right. Now, Ethereum. I think I have this also on the daily. I do. I think the reason I had it on the daily was for the same reason, to see if there was anything at this point on the market with your buy sell model. And it looks like there's plenty. I mean, we're in an area to where it was basically just going back and forth and back and forth on the daily. But this could also be the reason why that we saw those institutionalized bankers shorting Ethereum more than they were adding longs to Bitcoin, because you do have an area down here that is a weekly fair value gap that it did touch just barely, that it could fall back down into. Right? So be wary of that. Be wary of maybe a little bit more Bitcoin dominance rather than Ethereum. And if that does happen, I won't be surprised. So here, let me take a look at it on the 4 hour. Would you stop? Okay. All right. Let's see here. Sorry, I was thinking about where it was going to go for a second. All right. So this could be very, very similar. Could be going up to kind of fake people out. Let me get rid of this Fibonacci that's on here. I don't know why it's on here. Again, could be pushing up, pushing back down into this. Now what I have here marked out as a breaker, it could do that. Also hitting a fair value gap. If we look at it from an hour, I bet there will be a bullish order block somewhere around. Yep, right here. There's your bullish order block. You have equal lows just right around there. So to fake more people out, to make people think it's going to sell, it could push its way down to the bullish order block and then take off on up. That is what I would think would happen. Why? Because we spent a lot of time again in this area and we need to get out of it. Sorry. So that being said, where is the next target? That is a good question. I guess I should probably put a fib on it and see what kind of confluence that we have. even if it falls back into where I think it is going to, it'll still be above the 61.8%, which is going to be above the discounted price. However, it's already spent some time down here, which was probably a huge amount of the discounted price. So I'm pretty sure everybody's got theirs by now. They're just waiting on it for it to climb. Is there any confluences here? Let me see. I like, of course, the 200%, and of course, the 162. 162, if you look at this confluence right here, get a ray. Trying to think if I really needed a ray or not, but I think I do. Okay. I hit the wrong button. Okay. Oh, it's already there. Never mind. Okay. So, just need to move it a little bit. Boom, right there. Oh, dang it, moved up again. So, this ray right here is right on the 162%. And this is your bearish order block. So I could turn this into, no, not rectangle. Turn this into red. And text in red. Bearish OB or bearish order block. Right? That's what that means. So, right at the 162% is where you should see a rejection happen. It's exactly, I mean, it couldn't have worked out any more perfectly than that. I mean, these things do not happen by accident, folks. These things happen for a reason. There's a reason price works out the way it does. There's a reason the Fibonacci's work out the way they do. And it's because smart money knows the algorithm. They know how to play this game, and then they know how to play it well. So I would say, again, going to fall back probably into that either breaker, run these highs. As you can see, there's a big long line of highs right there. Could be running those highs up into, I think that was a 4-hour fair value gap earlier. And then right above that is the 127, right? Could touch that, pull back into the fair value gap, the 4-hour fair value gap, and then slowly work its way up to the 162% to where we'll probably see a projection. Okay? So hope that makes sense. We're going to move on to Monero. Again, Monero on the daily. Let me see. There has been a lot going on in this area previously. I don't think so. I think this area is pretty dead. I think this is the lowest like that Monero has ever been. And to really find out about that, instead of using a day chart, let's use a monthly chart. Yep. Wow. So, considering it hasn't really had an area prior to where we had been, my guess, and not even a guess, I think this thing's going to run up hard and fast. I don't see a reason for it not to, especially where everything else is moving up. And the area that we're looking at previously could have kind of been cluttered for the the market maker buy sell model. So instead of being cluttered, what we could do all right, so it did fall back down into this bullish order block here. Now it's starting to move its way back up. Trying to think about this. So, it did fall back into this fair value gap. We already got to look at that one. Fill this one out, and then after that, I think it would just run because it does show daily for fair value gap. So I think once Monday gets here, maybe not even Monday. Yeah, maybe Monday. I think by Monday, it's just tomorrow or today, I guess you could say, since it's past midnight in my time. I think we could definitely see this moving on up. How far up? I have no idea, but I think we should be fine after that. All right. Well, any more comments, questions, concerns? You can comment below. That'd be great. Also, you can hit me up on Twitter, Instagram. Those links are also in my bio. So it's generally body X to Wix, no matter what kind of a platform you're on, unless it's Telegram. That's the only one that's different. But I really don't use Telegram all that much. I use Locals more. So if you want to join Locals, and I can throw you some secrets, I guess you could, if you will, regarding how to assess the situation and how to make sure you're following the right path, I guess. Anyways, late. I just want to give a quick update. Thank you all for watching, and hopefully see you very, very soon. But if not, I should be back with another video hopefully next week. But I'm going to try to get up a little bit earlier each day and try to get at least maybe like a 10-minute segment on something, every day. That's going to start trying to be my goal every day. Instead of doing these long ones, like I just did an hour one, right now I'm doing 30-minute one. Maybe just do a quick 10-minute one. That's it. One quick chart. We'll go over it. Maybe we'll go over some news, something like that. So, thanks again for watching, and always remember, well, first, again, just remember to like this video if you did like what I like to say. If you'd love to, subscribe. That would be awesome. Also, please, 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 if somebody needs some help, share this video with them. Okay? All right, guys. Thanks a lot. Have a great weekend. And now is the new crypto week. We should see what happens with the new week. So, yeah, next weekend's 4th of July. So, have a great week, and hope you all have a great 4th of July if I don't talk to you before then.